Hello and a very warm welcome to everyone. I am Shrija Agrawal and you are watching our special series, Mint Sustainability Dialogues, and here's our first dispatch, ESG reporting and opportunity for New India. Before we get into a meaningful discussion with this August panel, it's time to do some context setting. There has been growing support in recent years for the concept of stakeholder capitalism and a recognition of the importance of creating long-term value. It is a commitment that surprisingly to some has remained strong despite the economic pressures that have risen from the COVID-19 pandemic. Stakeholder capitalism is a philosophy based on the belief that companies have an obligation that goes beyond simply providing returns for shareholders. It suggests that companies should be mindful of and responsive to their impact on society and the environment. This can involve creating secure jobs for employees, embracing sustainable practices, serving customers loyally, cultivating long-term supplier relationships, paying fair taxes, or working to minimize the environmental footprints of operations. Now, this form of inclusive capitalism is not necessarily new. It was popular in the 1950s and 60s, but it is now making a comeback, and this time ESG issues are really at the heart of it. Environmental, social, and governance, ESG reporting analysis can furnish valuable insights and help create long-term value for stakeholders, positively impact the financial metrics of a company, and better inform investment decisions. Disseminating data regarding the organization's operations in three areas: environmental, social, and corporate governance provide a snapshot of the business's impact for investors. This analysis summarizes quantitative and qualitative disclosures and helps screen investments. ESG reporting helps investors avoid companies that might pose a greater financial risk due to their environmental performance or other social or governmental practices. But beyond traditional financial metrics, when did investors start caring about these new parameters? Well, looks like they do. Institutional investors now increasingly aligning portfolios based on how an enterprise's ESG performance is. They are increasingly of the opinion that companies that have a greater ESG performance are better ready for the long term, less risky, and better prepared for uncertainty and volatility, which makes such companies truly anti-fragile. Once on the sidelines, governance and sustainability have been brought to the center of the boardroom table conversations and are instrumental in acquiring higher margins and more profitability. When supply chains are organic, products are ESG compliant, and the workforce is taken care of, consumers and investors positively respond to them. Hence, such organizations may have a competitive advantage over those who operate traditionally. Climate change, human rights, diversity, and equality are being looked at more closely by corporations because they know the world is watching. Sure, it's a pandemic, and companies have been massively affected. And while their fight or flight response has put them in survival mode, ESG issues are considered integral to how resilient a company is. With the world on fire, it's time to be forearmed as the fight is already here. The need for a sustainable future, behavioral changes, and reductions in carbon emissions are paramount, and organizations know it. Those that do not recognize it have lost the trust of their customers and not done too well. Still in its nascent stages in India, but ESG investing is surely gaining traction. Inflows in sustainable or ESG funds increased about 21% to 3,686 crore in FY21 compared to 2,904 crores in FY20. The question now really is, can multi-stakeholder considerations build sustainable business models? Can our future be decarbonized, and will the long-term resilience be truly feasible? Will robust frameworks create economic recovery? Now, with SEBI's business responsibility and sustainability report (BSR) standards to soon be mandatory from 2022 for top companies, how will investment decisions evolve? Will ESG performance be a critical focus even post COVID-19? With COVID-19 reinforcing the imperative, where do we go from here in a post-investing landscape?
Thank you, Shrija and Mint, for this opportunity to speak on one of the most critical subjects of the next decade: sustainability, impact, and ESG. Our investments today jointly have a potential of generating 450 billion kilowatt hours of clean energy creating tens of thousands of jobs and adding over $5 billion to the green economy over the next decade. 2020 came with unusual lessons, showing us the importance of capabilities that businesses need to be equipped with, and also strengthened our resolve to be meaningful contributors to a sustainable future. It has given us a whole new perspective on risk. As long-term investors, these lessons need to be incorporated to further fortify our businesses, to become even better diversified, internally resilient, and socially contributing entities. We have been proactively addressing the path towards limiting global warming to the increase of 1.5 degrees Celsius by 2030. We create value in our portfolio companies by complying with the highest standards of ESG. We bring sustainability to become part and core of the business strategy. We tap talent which understands this, not only how to manage it, but also to create the right impacts. And finally, leverage the power of collaboration to catalyze rapid scale-ups. As part of our every investment evaluation process, we assess each business's ability to meet required ESG health and safety standards, as well as its environmental and social impact. And if for whatever reason the business fails to meet our expectation on any of these, then we decide not to invest in that business. It's important that the invested management is as willing and committed to drive these objectives. While evaluating investment opportunities, a lack of high quality data is one of the most frequent challenges we face. This is largely because a lack of understanding and knowledge, which is there today in the ecosystem of how does one measure, create right ESG policies and practices, and then finally report in transparent manners, which is understandable by the investing community. Our factors for assessing ESG is in terms of three areas. One, is it value accretive to the business? Two, does it reduce risk on returns? And three, finally, does it achieve any stated financial goals? We look at any one or more of these three objectives to finally identify what factors we are basically investing in to create the right impact and sustainability for the business. As a result of that, ESG is a core part of our investment process today. And if we look at it, it is required to be incorporated across the entire deal life cycle for us. We look at it at the stage of screening, going up right up to the stage of exit. Now, most companies, when we look at them, have different levels of preparedness when it comes to implementing ESG policies, measuring and reporting it. And a lot of this varies because of the company's own strategic priorities and whether those priorities are aligned with the overall objectives of being sustainable and driving impact. What we have used in many cases, our own ESG teams, along with experts which go in to actually diligence the current preparedness of the company, understand what the baseline performance is, use benchmarking analysis, which is, I think, becoming one of the most important tools to set the right targets for the underlying business, and then really work with these portfolio companies, providing guidance and support in establishing and finally championing ESG ecosystems. What we found surprisingly, that while many people attribute this to as a costly exercise, we actually end up identifying many, many accretive value drivers through savings, through all kinds of efforts that we do to reduce the impact that these businesses are having on society and the environment. And finally, we've also seen that the value which gets created for these business enterprises in the minds of investors is a true sustainable outcome, we believe. And it kind of, I would say, a key championing objective of why today companies should adopt ESG very aggressively. When it comes to, I think, one of the big other challenges is really around the various reporting disclosure standards. I think globally, it's kind of very similar to what happened to the accounting standards globally, right? That as the standards evolved and as they became more sophisticated to keep in touch with the reality of businesses, it's a similar kind of an evolution that we're going through on ESG also, that there are many standards coming out globally. including in India, where different regulators are setting up different disclosure standards. But I do believe that there is a very strong effort today to harmonize all of them. An example, again, is what the World Economic Forum is doing, along with the big four accounting firms, where they're trying to harmonize the standard and the reporting mechanisms and frameworks to ensure that companies can use a common yardstick to measure and benchmark each other on it. So, in summary, I do believe that both these are positive and sustainable, and one should aggressively adopt and adapt to incorporating ESG and sustainability in their life cycle. Another key area is also around the issue of the need for policy action and regulatory initiatives. And this is mainly to set consistent standards and increase transparency. We've already seen in the Indian market, both from a government perspective and from various regulators' perspectives, lots of positive actions being taken in terms of measurement, reporting, and transparency and disclosures around ESG standards and ESG factors. We do believe that as the Indian economy continues to build and perform, this will become an increasingly important peg. And this peg is mainly important from a perspective of attracting capital of the right kind to the Indian economy. There is a need for companies as investors as well to define the real impact created from ESG. And this need is coming from the fact that today there are many standards and there are many benchmarks which are being applied to measure ESG or even to identify financial performance or business risk reduction. I would say it's, in a sense, we have to ensure that ESG is not just a buzzword, but a mechanism for companies to deliver sustainable business performance, doing good and doing well, and not just sounding good. These multiple frameworks that are there which are in use for ESG reporting, today there is a harmonization that is being worked towards. Already, international organizations like the World Economic Foundation, in collaboration with the big four accounting firms, are working towards a harmonization of these frameworks and bringing about a convergence towards the core KPIs that need to be measured, as well as the reporting methodologies to be adopted. This is critical eventually if investors are to make data-driven comparisons of ESG performance while evaluating investment opportunities. Finally, to summarize, I do believe that India has emerged as one of the fastest growing emerging developing economies in the world and has the potential to feature amongst the top 3 global economic powers over the next decade. A recent research report by ODI reported that India is also witnessing dire impacts of climate change. However, 2020 showed us something different. There was a silver lining. The impacts caused by the economic slowdown, combined with the growth in renewable energy and widespread digital adoption, actually led to a significant reduction in India's CO2 emissions. India is already one of the leading countries in the world when it comes to meeting its climate objectives defined under COP21. This green, I would say, silver lining about a reduction in CO2 emissions is something which is a definite sign for the country now to invest in a green economy. There's a huge amount of capital required for this, over $2.5 trillion. However, we are mobilizing less than 25% of that amount. Investors and corporates are in a prime position to channel these investments to combat climate change and social equality and benefit from the gaps in the current market. In summary, the role of countries, corporates, and citizens in moving from profit maximization towards profit with purpose needs to be collaborative. Common standards of measuring and benchmarking and clear financial metrics would provide clear results to stakeholders is the need of the hour. Thank you.
To break it all down, I have with me a very meaningful panel with me. Please help me welcome Suman Sinha, Chairman Managing Director, Renew; Arun Mishra, Chief Executive Officer, Hindustan Zinc Limited; Kulmeet Bawa, President Managing Director, SAP Indian Continent; Alka Talwar, Chief CSR, Sustainability Tata Chemicals; and Rajiv Memani, Chief Executive Officer, EY India. Also, please help me welcome Amit Tandon, from the Institutional Investor Advisory Services. It's my sheer pleasure and privilege to welcome all of you to this very meaningful discussion. Let me begin with you, Arun. And it's a very newsy and pertinent question that we all have seen. HCL's big, bold move from diesel to EVs, which have started a new trend in India's large manufacturing business. I want to understand from you that while this definitely has a very defined and meaningful environmental benefit, is this purely a sustainability decision or a business decision? What were the mental modes of thinking? Can you walk us through the process and the factors that helped you arrive at this paradigm shift?
Yeah, so thanks, Vijay. I would rather look at first, there is no compartmentalization as a sustainability decision vis-a-vis a business decision, not one against the other. Whatever you do, if in today's world, when you call business something as a business, it has to be a sustainable business. It has to address all stakeholders. And more importantly, nowadays, the immediate society is the most important stakeholder that gets affected by the operations. So their claim to the success of the company is also much more. The social license to operate has become the minimum requirement for any business to operate. Under that condition, when we are looking at EV as the future that all of us have to step into. It is something that is writing is on the wall that the fossil fuel based operations are not going to stay there for long. The sooner we migrate, the better. And Hindustan Zinc being world's second largest company, it is prime to discover the future ourselves, get ourselves ready and get in there. Unless the big industrial houses come in, the innovators, the researchers, the people who bring out new technology, they also would not have sufficient motivation to pursue their research and bring us sustainable solutions. It may look initially to be costly, but I am sure it is as good as something like what computer was in the early 70s or what mobile phones were in the late 80s. Today, it is the EV vehicles that everybody is talking of, but it's the future. In my understanding, another 5 years' time, perhaps the diesel and petrol consuming cars will be extinct, and all of us would be proudly saying that my house is free from diesel or petrol. That will be the conversation that we say. We have already signed MOUs with global manufacturers, and target is I have kept aside $1 billion to spend in next 5 years to completely revamp our current mining infrastructure into fully EV infrastructure. It's good in all possible ways. Talk of business, it's good on business ways. You talk of people's health, it really adds to the health of the people. The mine environment completely changes. It's much quieter. It's much smarter. You can connect every device, remote operations, data flow, whatever you want to have in this current technology world, you can have with these EV vehicles. And that's the future all of us know we have to get into. The sooner we get there, the better it is for us.
Great. So you essentially pointed towards the fact that how the future of manufacturing or the future organization will look like. And you also mentioned that you have earmarked about $1 billion for your entire EV plan. So tell me one thing, Arun, when you think about business objectives being so closely aligned with sustainability objectives, what are some of the other core business processes you believe you can help not just achieve sustainability goals, but also prove to be a profitable transformation in the mid to long term?
So if people, sometime in 90s, we started with balanced scorecard, right? We used to have balanced scorecard and every CEO used to say, I am trying to address all stakeholders. Now that has become a old way of working. Now it is SDG you need to have. Whatever is your volume and earning and top line and bottom line goals, if they are not connected with sustainable development goals, they are not the goals of a CEO. So we have fixed our 2025 sustainability goals. We have picked up from United Nations development goals, made 8 cases for us, which is applicable to us, and they are very, very important for our kind of operation. We want to reduce by 0.5 million ton of carbon dioxide on absolute basis, not on intensity basis, CO2 equivalent in next 5 years. We are currently 2.41 times water positive. We want to become 5 times water positive, and not only by recirculating and consuming mine water, also creating more and more rainwater harvesting infrastructure in all the villages around our areas of operation. So we add more water to the ground than what we take. We are looking at 30% diversity. We are looking at touching 1 million lives. We are looking at responsible sourcing, which will ensure that all our suppliers also go green, and all our suppliers in the supply chain also have a absolutely can stand up to due diligence of any human rights violation, any labor act violation, any environment act violation before they qualify to become our suppliers. So all the goals are clearly articulated, communicated to our people, and we are pursuing them just like we are pursuing our volume cost or our net earning numbers or the top line and the bottom line. One is not for the other, neither we can achieve one without achieving the other. That's the thing.
Okay, I would like to sort of bring you in, Rajiv, here. We just heard from Arun and making a very sort of loud and clear messaging there that business and sustainability objectives are intertwined and one can't be looked at different from the other. I want to understand from you that increasingly this entire narrative about stakeholder capitalism is gaining so much traction. I want to understand from you, given your deep expertise in the advisory business and chairing UI India, how much is the readiness of India Inc. to look at ESG much more seriously? What really are the ongoing observations? Can you share with us?
Yeah. So Shrija, what I would say is that ESG is now, earlier it was a more of a softer issue. Now it's become strategic issue for most of the companies. I think it's an integral part of their long-term value creation. And it's very much on the agenda of most of the boards and very much on the agenda of CEOs. Some companies are talking more about it, some companies are actually executing that much better, and I think the levels of conviction may vary, and I think that may vary from sector to sector, but by and large I would feel that companies are now today saying that if they have to look at their future for next 4 years, next 5 years, 10 years, and if they have to look at a value creation strategy, then how sustainability, technology, and other things impact their business is very, very integral. The second thing is that when companies and look at valuations today, valuations are driven by your profits after tax into whatever the multiples are. And logically, I know that a lot of people will say that a lot of companies don't make profit after tax, but I'm just saying logically, it's profit after tax at some stage into a certain multiple. And that multiple, one important component of that multiple is the entire ESG framework. It's not only just about environment, but it's also about the governance and how you're dealing with governance. And people like Amit will be in a great position to talk about that. And also, investors like to deal with companies that have got greater societal awareness and are much more responsible and want to give back to the environment and to society more than what they're taking from it. The third thing is just the availability of funds. More and more funds are now ESG focused. Some of them could be more end product funds, where your end product, like if you're a renewable company or company in circular economy, but a lot of people also look at ESG parameters broadly when they're looking at investing. And the estimate is that there would be by 2025 almost $50 trillion very focused on ESG investing. And if you look at the letters issued by some of the largest investors around the world, and I think the trend is catching up in India also, I think more and more people are looking at ESG investing. And therefore, so if you look at long-term value from a business standpoint, you look at what it does from a valuation standpoint, you look at what it does from a availability of funds standpoint. The fourth, I would say, is that the regulatory pressure also, and I think that does play a role as much as we want to undermine it, is also getting very rapid. So if you look at the BRSR report, and I'm talking more from Indian companies, but that's true. Joe Biden is looking at coming out very comprehensive regulations in the US. You have the taxonomy report in EU. The BRSR report that's coming out, it's pretty comprehensive. And whilst it's voluntary for 1,000 companies for this year, but from next year onwards, it becomes compulsory. And I would assume that a lot of companies who are also in the voluntary category will try and report, will be looking at reporting on the BRSR. And maybe at some stage you can get into the details of that. But from the earlier BRR report to the current BRSR report, I think the the journey traveled is very high. There's still some ambiguity and data collection, and it's much more quantitative. And I would say gradually, if you are customers and are also looking at it, so from an overall business standpoint, especially if you're exporting, and if you're looking at EU as a market and others, they do want to understand what's your sustainability strategy, how you're contributing to that. And finally, I would say, whilst it's not happening so much in India, but we are seeing much more of that in the Western world, and I think it'll start flowing in India. Even from an attracting talent standpoint, people want to see what is the ESG framework, how companies dealt with COVID, how companies deal with other societal issues, how do you deal with diversity. I think those things are very important from an employee standpoint. Obviously, they don't want to be, as Arun rightly mentioned, they don't want to be part of a overall equation where it's a environment unfriendly business, and at least relative to the peer set. They want to be working for a company that is much more environmentally conscious and everything. It doesn't mean that people will not work for refining companies or for coal extraction companies. They will, but relative to the others, how the company is migrating, what are the policies and procedures that they are applying, I think that's what people will look at. So I think corporate India, both from a value creation standpoint and also from a long-term strategy, just sustaining itself is becoming much more conscious, and both for business reasons, regulatory reasons. I think the movement towards ESG is becoming very stronger. So the earlier dictum of saying that, do no harm to environment, do no harm to society, to actually proactively contribute to the environment, proactively contribute to the society, I think that's becoming the new mantra.
Okay, so that definitely is becoming the new mantra. And like Rajiv outlined, there are definitely perfect storm-like conditions where everything seems to be coming together, and resilience and long-term shareholder value creation. For that, ESG is the way forward. I want to sort of get you in, Pulumi, taking it forward from what Arun and Rajiv both outlined. And you have India's growth aspirations to really become a $10 trillion economic powerhouse. And one can really expect rapid increase in economic activity and consequently larger CO2 footprints. What's your prescription to responsible industrialization to help enterprises really meet the climate change challenges in that context?
Yeah, thanks, Shrija. I don't know about a prescription, but I think Rajiv and Arun have covered a lot of that very beautifully. But you're absolutely right. Over the next decade, we are going to be seeing a lot of growth in most sectors to get to that $10 trillion mark that you said, right? And then this is going to be on the back, of course, of a lot of an increased economic activity. And needless to say, and what we've been discussing, that the environmental impact of this growth is going to be massive, humongous, to say the least, right? And given that we are already the third largest CO2 emitter after China and US, and that number I think is doubled, if I'm not wrong, in the last 8 or 10 years. So it goes without saying that yes, we will need to plan our next phase of growth, like Arun mentioned, in a very responsible manner, right? So that we don't have a catastrophe on our hands. Now, on our today. And this was very interesting for us, that the top 250 customers for us in India, for SAP in India, are today contributing to about 37% of India's greenhouse gas emissions, which is a large number from our perspective. And basis these interactions, I think there were some things or some steps that sprung out for us, which I think are very essential to meet the climate change challenges that you're talking about. And the first one, of course, it sort of overlays into what Rajiv was saying. It's all around the mindset change, right? So that's point number one, super critical. So while the government continues to take its steps, I guess sustainability needs to become embedded, or needs to be embedded or get embedded into the culture of a business and the mindset of its people. So, it can no longer be viewed as a cost. And I think Arun was alluding to the 1 billion that they are spending over the next few years. So it's no longer a cost, but it needs to come onto their P&L as a value creator or a differentiator or a competitive advantage, competitive edge, whatever you want to call it, right? And the silver lining, and again, it's been touched on, but I just wanted to reiterate that investors today, through our lens, are definitely placing a huge emphasis on sustainability as a prerequisite, right? And Rajiv touched upon that, whether it's the ESG fund, 1.7 trillion, I think he said it'll move up to about a 50 trillion in due course, or India, again, I know ESG funds are growing at the rate of 40%. Consumers themselves, Shrija, today, from what we are seeing, are starting to differentiate between brands based on their sustainability practices. So if you want to do business with an apparel house, or an apparel brand that is committed to sustainably sourced cotton, right? So you need to then comply or just lose the business. So number one is mindset change. Number two, I think very important from what we are noticing is we will need to embed sustainability KPIs into all our decisions. Arun, I was going to say business decisions, but I'm saying decisions all across, right? Because apart from impacting just the environmental footprint, I think doing so can help us or can help businesses reduce their production costs, service costs, generate new streams of revenue for themselves, supply chain resiliency, and I could go on. And we are already seeing, insights that are available through automating or sharpening the supply chain processes, which are helping reduce carbon footprints. Businesses can take more informed decisions, what kind of material to source, where to source the raw material, what is the optimal transportation means, et cetera, et cetera. So that's point number two. How do we embed sustainability KPIs into the fabric of our business? Number three is measuring. Super important, very simple, but you cannot correct anything that you're not measuring, right? And for that, of course, there are two steps from our lens. One, of course, is the pace at which you are digitizing. Since it's humanly impossible to track your so-called footprint or the sustainability footprint all across the business functions. So digitization, of course, is super important to automate the flow of data, and thereafter you embed a host of analytics into your systems, right? So that you can identify the outliers, so that you can focus on realigning. So number three is measuring, and number four, of course, is what your topic today is about, reporting, right? So while ESG reporting has been mandated by the SEBI, I still think internal reporting is super important, and it helps in building benchmarks and tracking performance. And today, of course, companies like ourselves and EY probably have a lot of means to automate these whole reporting standards, both from internal as well as external regulatory standards. So Shrija, those are the top 3 or 4 areas that I would think is a prescription of sorts.
Thanks for that, Kulmeet. That was meaningful. I want to sort of get you in, Arun, here, taking it further from what Kulmeet just outlined. Essentially, design thinking and how you can perhaps think about sustainability in your organization. He spoke about key things like a KPI framework. How do you, internal validation is the external validation. How do you measure it more proactively? So let me ask you a question as a business leader of such a large organization. To perhaps a younger company, I often pose this question: what is the culture of innovation in your organization? Let me ask you, what is the culture of measuring sustainability or an ESG framework in your organization? Do you have one? Are you looking at it? Because you have a very ambitious plan of $1 billion rollout for your EV. So how are you thinking about it?
So first thing is all CEOs run by the money. So you have to put a money number. Without the money number, nothing works, right? So put the carbon pricing. Without that, don't evaluate any project. You can't evaluate project in the traditional methods of IRR without doing the carbon pricing part of it. Any project that somebody proposes must have the CO2 emissions factored, put a number to it, then you will get the real picture. That, okay, what is the cost of this project and then what is the return? That is number one. Number two, as Kulmeet correctly said, internal benchmarking. Now, within Hindustan Zinc, if you say the units are competing, whose greenhouse gas emission is how much? and who can reduce it further? Which particular unit can become net zero faster than other units? Who standalone can become a load center 100% on the renewable power? Right now, we are looking at one of the big load center called the Rajpura Dariba load center. It will be about 300 megawatt out of total consumption of 600 megawatt. Can we make it lock, stock and barrel 100% sourced only from renewable power? And in India, those innovations have come. There are region power companies which are supplying you 24/7 renewable power, which is a mix of wind, which is a mix of solar, which is a mix of little bit of grid, and also it's a mix of potential energy by water storage and all that. So things are available, solutions are available. You have to make newer business model. As far as cost is concerned, it's only that what part of stakeholder cost you are ready to take on your plate instead of putting it on the stakeholder. That's the right lens to look at it. If I don't take it on my cost, somebody else is paying for it, either through the quality of life he or she is living or through the environment he or she is forced to live on. Can I take that cost into my business and calculate my cost and then look at the return? That would be real stakeholder service that we look at. Yes, we have internal mechanisms in place, which is innovation, which is performance improvement tracker. We have consultant working with us on the entire ESG platform. And Rajiv correctly said, yes, I am looking at valuation of Hindustan Zinc, which is currently 18 billion. And with all my ESG initiatives, in 5 years, if 50% of my power becomes completely renewable, meaning 50% of my product becomes completely green product, what would be the valuation in the market that we get? Surely no CEO works without any dollar number. Nothing is for charity. And at the end of the day, it has to come back to as a return for all the stakeholders. And I am fully motivated by the dollar numbers there as well. Rajiv correctly said it's the valuation that I'm targeting, and that valuation will come next generation valuation, not through brick and mortar, but only through ESG.
That's well said. Thanks for that, Arun. I want to bring you in, Amit, here. And very candid revelation coming here from Arun that, listen, I know ESG considerations are important, but I'm also driven by dollar numbers, and I have that valuation number as my future scorecard. My stakeholders, my boardroom, everybody's going to judge me through that also. At a time when inclusive capitalism is doing such larger rounds, my question to you, Amit, really is that there could be temptations to do what is greenwashing that we have seen in the energy space. There could be something like ESG washing also. It could be anything in want of higher valuations, to be perceived in a certain manner. If you look at private markets, for instance, LPs are increasingly pressing their private equity fund managers to have ESG as a very important and as the go-to investment mandate in the charter. So there could be temptations from promoters, corporations to look very ESG friendly. So is there some kind of ESG washing or greenwashing already creeping in? Since you are the person from a governance standpoint, help us demystify some of that.
Thanks, Shrija, for inviting me for your program. Look, one of the things I'd like to begin by saying is that, this whole ESG is an artificial construct because, in a normal situation, you would not put E, S, and G together. It's like someone buying insurance, considering it to be a saving product with some returns. So you have to kind of look at it this way, that E is separate, S is separate, and G is separate. But for whatever reason, we find ourselves caught up in this bind. Very specifically to the question which you asked with regard to ESG, I kind of like to think that we are in a slightly good place compared to what is happening in the rest of the world, because, this is something where you kind of have leapfrogged the others, and we've now started talking about ESG when the rest of the world has kind of spent some time. I wouldn't say a lot of time, but about 3, 4, 5 years, and therefore they've kind of seen issues like greenwashing, etc. But when we kind of start to embrace ESG, some of those concerns, some of those issues are already out in the open. And therefore, when investors think about it and when companies think about it, you can be pretty sure that they realize that this is a danger. And therefore, it's something which they're going to be watching out for. In this context, I kind of want to talk a little bit about, as a firm, for the last 1 year, we've been holding webinars where companies come and kind of talk about what is happening on ESG. And I kind of, rather than get into the specific names, etc., all I'd say is that, if I look at the conversations which we had last September and the conversations, let's say, which we had in May, June, or July of this year, I find there's a huge degree of sophistication which has come in, whether it is with investors or whether it is with companies. What companies talk about is that what they're doing, we heard some reference of that from what Arun said. Rajiv spoke about the fact that, look, ESG is now getting embedded into the technology, and therefore there is this sophistication which is slowly creeping into the conversations which companies are having. Here, I'd just like to pause and say that, we find it a little bit more well-defined for the larger companies than the smaller companies. And then, if you kind of look at SMEs, I'm not saying it's not there, but those who are a little bit more aware are the ones who kind of talk about ESG. But there is the realization with all of them that, look, if we want to be suppliers to the larger companies, it's an area we have to focus on. And unless we focus on sustainability, we are not going to, we might very quickly lose the business. So while there is a realization that, look, it needs an investment, there's also a realization that without that investment, you can kind of pretty much write off what you've done. And the same goes with investors. Of course, investors, as I said, because of the fact that, ESG are separate and they're all kind of trying to mesh it together, it kind of causes confusion. But their question is that, look, how do we evaluate companies? It's kind of pretty much on everyone's mind. How do we know that there isn't any greenwashing going on? And therefore, what they've already started doing is that they've kind of started saying that, look, this is the data we have. This is the surrogate data we have. If we are looking at one company and another company where the data is a little bit of an outlier, it's good to understand why is it so. Is it because they've invested a little bit more in technology? Or is it because they've got different reporting standards? Or is it that they're trying to embellish the data when they present it to us? Of course, the big challenge which at least the investors face today is that, when you look at the number of data points on the other side, so as they're trying to kind of sink their teeth or circle to land in this whole environment with sustainability and governance, they find that there's just too much data. And at this moment, they're not really sure how to start to interpret the data. So if you look at financial numbers, everyone knows what to think about it. Everyone has a definition of, profit, operating profit, EPS. So you throw some numbers, they're able to kind of clean it up and scrub the data to put it in a format which is understood internally. That's going to be a big challenge as far as investors are concerned with regard to what is the data, how do you interpret it, is it good, is it bad, is it sustainable, what does it do to the bottom line, and what does it do to the company performance. But that is where we are. But, coming back to the question you asked on greenwashing, but there is a risk that I was saying that, look, even as the stage in which we are rolling out and embracing sustainability and governance, there is an understanding with companies that greenwashing is a risk, and therefore let's kind of start focusing on it from day one.
Okay. Thanks for that, Amit. I would like to bring you in, Rajiv, here with this point of greenwashing and what Amit could have outlined that there is sophistication creeping in. And he gave the timelines from the last September to this year, about January, February. And one can also imagine that there's a huge regulatory stick from the SEBI hanging in on the corporation side. If you look at the value chain of the corporations, where do you see the readiness or the impact has been felt larger? One can perhaps imagine it's much more with the larger organizations. Do you see the acceptance coming in SMEs? And what about these technology unicorns sitting on such billion-dollar valuations? Has the ESG conversations come from the promoters, or is it more sort of fed by the investors who want to look good in front of the LPs? Give us an on-the-ground clear picture on the readiness of ESG for India Inc.
I completely agree with Amit. I think there has been a lot of awareness on the ESG front. And I think COVID was a big trigger for that. Earlier people were, so this momentum started pre-COVID, it kind of slowed down. And then it got massive tailwinds as we went through COVID. All three elements especially the ENS part of it, I think got massive tailwinds because of that. And I think that accelerated the process. The second thing I would say is, this the issue on resources and some key things developing. So, for example, the sophisticated developments in the EV side. I mean, whilst they were there, but the speed at which people are talking of battery development, the costs coming down, the announcements on hydrogen, from what it is, at roughly $4.5 per kg. Now people are starting to talk about $2 a kg, $1.5 a kg, or even $1 a kg, 10 years, 15 years from now. Every company then starts thinking to say, okay, how will this impact my business? If I'm planning an expansion today of steel capacity, and if green hydrogen was to become a reality, then how do I plan for that? The way the solar costs have dropped down, I think that's been a big driver for the changes that are happening. The greater focus on circular economy, and more and more people are trying to say, with the number of technology products, gadgets that we have as they go out, how do the waste that it creates another level of challenges 5 years, 10 years from now. So companies are already talking about circular economy. How do they use cars? How do they use scrap, whether from whatever source is generating. So I think the thinking in this is really is really changing. So it is developed by developments, compulsions of countries. I think countries like India have got enormously to benefit from this, which are not resource rich, especially on energy side. The way science is developing, and especially solar as a being a base there, and the geopolitical issues that are surrounding it. The awareness amongst global investors. So letters being written out by Larry Fink and all the others to say what are the kind of companies they'll support, and the larger pension funds and everything. So the ESG metrics that they are following, and ultimately how the market is valuing. So market is today putting more and more premium on ESG. So I think that all those factors have accelerated the ESG trend globally. All these changes generally, the largest companies get impacted the most. The larger companies generally drive the change. And what happens is that, even if you look at ESG regulations, the way the regulations are, there is scope 1, scope 2, scope 3. So what is happening within your system, what's happening in the broader ecosystem, and what is happening right end to your suppliers. And whilst most companies are talking of scope 1, scope 2, at some stage people will start talking about scope 3. So I think it will start covering the entire value chain. So if Arun has to export zinc into other markets, especially in Europe and others, people will ask what is the ESG framework, what's the carbon footprint they have, and everything else. So I would say yes, it starts with larger companies, but I think it will go very rapidly into the mid-sized companies and everything. Obviously, they have greater resource constraints, and the transitioning with a large company can do rapidly with the managerial resources, financial resources that they have. They can do it much faster. Insofar as unicorns are concerned, I think most of them are in services business. I would say that most of them, yes, obviously investors, when they're investing, a lot of the investors now, especially if you have large pension funds, if you have sovereign wealth funds, and people who are taking money from the pension funds and sovereign wealth funds, they have to say what are the ESG matrix of the companies. But I would say, given the nature of most of the unicorns, young people having, largely attracting very, very young talent, and I would say pretty much very forward-looking mindset. My sense is that right now the business compulsion for many of them may not be that high, but you would start seeing that, okay, for logistics costs, can they use, if they're transporting, can they use electric? In the interim, can they use LNG vehicles and others? If they're looking at their own offices, what's the mix of solar and electric that they're having? Are they using sensors and others? So I don't think that it will only be investor pressure. Of course, that valuation is important to everyone. But I would say that the consciousness levels with the younger people and awareness is gradually growing, especially on the E side of it. Governance is generally focused because you have shareholding which is very, very distributed. I'm sure there will be cases in all this where which will stand out. But I would say for the majority of them, I would say ESG would come more naturally to them and maybe lesser challenge for most of their businesses.
And I must say, Rajiv, that you've answered all my questions.
Thank
And
you.
yeah, and I think there is quite a few significant takeaways from here. And I would like to bring in the lady on the panel here who's been silently listening to all of you from the technology perspective, resilience perspective, how to be agile on a forward-looking organization. We also heard from Amit in terms of the entire understanding about ESG and how it's a misnomer being understood as ESG, all being conjoined and together. They all they stand for three separate values. Now, from a Tata Chemicals perspective, and I want us to get you in, Alka, we just heard Arun talking about how they are thinking about the organization. My question to you is a simple and straightforward one before I get into the larger panel. How is Tata Chemicals really thinking about innovation and developing its solution for responsible production and design? Throw some light on that.
Thank you so much, Shrija. It's wonderful being in this panel. And let me start off by agreeing with Arun saying that sustainability and business strategy, they are one and the same. And they can never be separated. And if they are separated, then you would always go towards greenwashing because it's not what you are all about. For us at Tata Chemicals, I think it's been a sort of a DNA for us. We started off a product like Tata Salt. Right now, it's a common household name. But if you really go and look at it, it was made because there was a need for water and a need to leave the water for the community and reduce our own water footprint and then come up with a solution which would then benefit the community at large. So iodization, making up water, all of that combined together to get Tata Salt going. So this we have continued to do for quite some time, and definitely because the ESG, the environment and social issues bring out challenges, and to address each of these challenges, you have to think out of the box. You have to think differently. I can give an example, for instance, like our whole production system in our plant in Tata Chemicals Europe. We are just about to complete a plant which is on carbon capture and use, and it's the first in UK. It is innovative because here we are thinking not only that we're addressing the whole carbon climate change issue, we are also looking at how does it make business grow? Can we get a product out of it which would then move forward? So for us is putting all of these things together. We are looking at different practices like resource efficiency, smart manufacturing, safer operations. All of these are important sustainability elements and are part of things that go into how we design and manufacture our products. We have something what we call as responsible manufacturing index. It's what we sort of identify for each site, each business, which is a material and important issue for that business. It's not that all sustainability elements are important for all businesses, and so you have to. Otherwise, you will have about 90 odd, matrices that you're looking at, but very key important matrices that are put out together, which are then tracked and monitored and discussed in strategy meetings, so that we could have a better operations, safer for our communities, safer for our employees, and so on and so forth. So these are some of the things that help us continuously improve. Example, I can quickly give an example. When we are talking about reducing plastic waste, like packaging, and how do we address that? It means that we are not just working with ourselves. We have to work with our customers we moved from packaging to bulk, supply of material. That would mean that our customer would have to change the way they accept a material, they buy it, and they have the opportunity to then use it. And both of us benefit in terms of, the waste that we are looking at, or the circular economy that we are focusing on. Resource efficiency here again, because, now that you're using bulkers. So different things, little things that all add up to how we are producing, how we are in fact doing anything in the organization. That's the way I would sort of.
Thanks for that, Alka. I would like to bring you in, Arun, again here, and I think this is perhaps my last round of questioning with you. You heard from everybody on the panel here, and some interesting ideas came to the fore. We also spoke about this temptation of greenwashing, but the voice that came from the other side really was that perhaps sophistication has crept in. Promoters and business leaders are becoming much more aware of this. And of course, there's a premium on valuation when you are an ESG compliant company. My last question to you really is that you, as a business leader, has also gone through this transformation process in your organization also, as you have embarked on the sustainable journey. What are the 2 or 3 key learnings that you can share with us?
Absolutely. So any organizational evolution, when you look at it, first goes through the compliance route. That there are certain laws and mostly related to environment to begin with, and so we are complying. Then as it grows and it grows an international stature, it starts talking about leading on some of them. That while I'm complying to Indian norms on certain air quality, but I'm getting prepared for the European norms, hoping that tomorrow government of India is going to adopt that, and so it should not pose a challenge to me in future. So that was perhaps the first baby steps Indian big major corporates were taking when they were preparing themselves for their norms, which would come from US or Europe, and they all were afraid that they would become Indian norms going forward. That was the first baby step. Second step came the understanding that the business you cannot do yourself in isolation. You are part of the overall value chain. Whatever the product you are making, you are not making it yourself. And the whole value chain, there could be, risk analysis. Last about 10 years became a very, very well-formed corporate process. And slowly this risk analysis started appearing that your business is not entirely decided by you. Your business is entirely decided either by your set of customers or set of suppliers or the people who are around the places of your manufacturing, and also the other stakeholders like governments and regulators and all that. And this supply chain risk is a big risk that Indian corporates started understanding that even if I may decide to isolate myself and continue to produce zinc, but as Rajiv said, tomorrow my customers may say, I'm not going to buy zinc from you unless you show me or declare your carbon footprint on the production that we are doing. That puts a huge risk as far as I am concerned on the sustainability of my business. And that is going down entire value chain from customers, from the car makers who are using my zinc for galvanization, from the car users who are buying car. They are asking, am I buying a car which is worth the money? It does not have a larger carbon footprint, and it's just flowing through. I am pushing it to my suppliers. And I think that is the real movement that can happen in an industry, and that has started happening in. Parallelly, if you look at the evolution of IT and the digital, we would not have been able to know our carbon footprint the way we are able to know now, because all the operations are digitally wired, the numbers are available on the dashboard of CEO. We are able to analyze and put it in front, and good innovation started happening in the industry, because the starting point of innovation is understanding the difficulty, the reality, the data, data analytics, prediction, simulation, modeling. These were quite difficult. When I was starting my journey in the industry, it was unthinkable. But now the kind of modeling that happens, kind of simulation that happens, the digital twins people are creating, our own collaboration center in Hindustan Zinc, all our underground mines, all operations are visible. The data analysts are analyzing data day in and day out, throwing new insights. So these are all possible because of revolution in IT and digital, I would say. And that's the journey I have been witness to. And I am sure much bigger things to come in the way. Just like, as I said earlier, cell phones are there in every hand. There will be electric cars or electric scooters in every house, and nobody would have a diesel or a petrol car in next 5 years. That's what I believe in.
Thanks for that, Arun. And so you definitely have had huge, meaningful leadership lessons to learn along the way. And you said that the way mobile phone revolution brought in so much change, electric vehicle is about there, the entire EV generation is about to witness a huge change. I would like to sort of get you in, Amit, here. You started your entire conversation saying that, Shrija, there's not much understanding around this ESG, which stands for perhaps three very clear and defined objectives and values. And there's a natural temptation to conjoin them and perhaps simplify and dumb it down. My question to you really, and I think we should spend perhaps a couple of minutes trying to understand what SEBI did with this entire report that they came out, which is going to have a definite impact on India Inc. If you were to tell me how the industries of the future would be defined by the entire SEBI framework that came by, what would that truly be? How will business leaders and promoters increasingly think about building their organizations in the wake of the entire big SEBI announcement?
I'm presuming you're talking about the BRSR and not
yes.
But before that, I just want to clarify. All I'm saying is that the confusion. The people have taken so much time to come to grips with ESGs because the three don't sit well together, and you're kind of trying to weave them into one holistic. Or put them into one box altogether, though, effectively the three belong to three different boxes. So that's the point I was trying to make. Coming to this whole BRSR, I mean, you have to kind of look at it in terms of another development which has taken place. One is the fact that, the whole, the Companies Act, which we had spoke about, the companies have to look at the interest of all their stakeholders. And this kind of, shortly thereafter, you had the US Business Council, which Business Roundtable, which actually spoke about the fact that, for the longest, the corporates were defined as, saying that the business of business is business. And what they're supposed to do is maximize profit for shareholders. Now, the US Business Roundtable, which is an extremely influential body globally, kind of came up and said that, look, maybe we are this emphasis needs to shift from shareholders to stakeholders, and therefore everyone needs to be considered. Everyone is a part of the equation, whether it's your shareholder, whether it's your employee, whether it's your supplier, whether it is your distributor, whether it is the community you're operating in, etc., etc. So that is something which has had a huge impact on what is happening. Now, BRSR is just a manifestation of the philosophical change which we are seeing, which is happening. Of course, they kind of turned around and said that the BRR was based on 2011. There's a lot which has happened. You've got the SDGs, you've got the new Companies Act, and therefore let's kind of look at a new framework in which companies start to report. But what you have to remember is the underlying. And there has been a conversation which I've kind of repeatedly heard, whether it's Kulmeet or whether it's Rajiv or whether it was Mr. Mishra, which is that, look, you have to kind of carry your employees. And, what we have to be mindful of is the fact that, we've got a very young population who are kind of joining the job market. So if they come into work and they feel that, look, there's no purpose in what they're doing, they're going to get disillusioned very fast. And therefore, you've got people already complaining about the churn in business. That will actually go up. It's quite interesting. Later this afternoon, I'm in conversation with Professor C.V. Bhattacharya. And one of the things he said is, he kind of talks about, and in his framework is that, look, companies need to have a purpose, and that purpose needs to be accepted or evangelized within the company and accepted by everyone, so that when people come into work, they feel a little bit good about it. A happy coincidence, on Sunday, there was an article in Business Standard by Sandeep Goyal, where Sandeep talks about his nephew who kind of gave up a job and took something which paid him half as much because he felt that, look, what he's going to be doing is socially much more relevant. So therefore, I think what the SEBI regulations are kind of doing is they're saying, okay, let's kind of quantify some aspects of it, et cetera, and they've got some data to be reported. But what we need to remember is that, look, all this is taking place within a larger development, which is taking place within the economy and within all the citizens. I know it's not kind of giving you a direct answer, but that's how I'm seeing things happen. And why is it that it will gain currency much more rapidly than most people imagine it to be?
Okay, Rajiv, I would like to sort of bring you in here to adding to what Amit just sort of mentioned on the entire acceptance of the SEBI BSR framework. Are you already seeing that? And he spoke about the purposeful capital coming to the fore and how the purpose in the organization needs to evangelize, perhaps begin from the top leadership, and that common vision to be shared with everybody. Are you seeing that conversations increasingly happening with promoters?
Yeah, I think that's happening. I would say that, I mean, there are challenges because this is quite a significant change from what it was earlier. Also, it's come at a very rapid pace and does raise a lot of expectations. So just to give you an example, I mean, earlier in the BRR report, there were about 53 questions, 53, 54 or 59 questions that had to be answered. In this, there are almost 150, 160 questions that needs to be answered, out of which I think 98 is what is called essential, and about 42 or 48, I can't remember, are what are more leadership kind of questions and are this thing. There are almost 500 quantitative metrics that are there. So both in terms of the specificity that's required, the data collection that will be required for doing this, the quantitative analysis that will be required for BRSR report is very extensive. So companies are definitely engaging, but I would say a lot of them are right now trying to say, okay, how do I process this? And the most interesting thing is that there are 9 pillars. So the report is broken down into 3 sort of sub-segments. And in the last segment, they talk about 9 pillars. And those 9 pillars could range from policy advocacy, human rights, products, how are you doing your product composition. So it's all range of 9 products and multiple points under which you have to comment on that. So it's very extensive report. I don't think globally there are too many countries that have come up with something like this. I think South Africa has something which is slightly similar. So I think it's a massive change for Indian companies. And they're going through that process. I won't say anyone is readily prepared. I think it's very early stages, but a lot of companies are looking at voluntary disclosure. And I would say most of them are trying to break this up into broadly 6 steps. First is really trying to do a competitive assessment of where they are, which I think Mr. Mishra also talked about, relative to peer sets, how they're doing. Then materiality assessment in terms of what are the key things that they should be looking at, what are the main this thing. Then trying to actually measure their GHG footprint. What is the actual footprint that is there? And the fourth is, what is the strategy that they should be employing to ensure that they are able to deal with this and what time frame they want to deal with all the issues. And the fifth, which I think Kulmeet also talked a lot about, is around the entire data collection. So, in the strategy, when you lay out the KPIs and everything else, what is the entire data collection strategy that you have? And the sixth piece is really on ESG reporting. So, companies are going through all these from maturity assessment at one level to the ESG reporting at the other level in trying to see how they prepare themselves for the BRSR reporting. I think Amit has a point.
Yeah, Amit.
Shrija, I'll kind of just add to what Rajiv has kind of said. And, there's this IICA, which is kind of sprung off from the Ministry of Corporate Affairs. 2 years ago, 3 years ago, did a survey of how has BRR worked. And they actually looked at the reporting of about 470 companies. So it's kind of pretty close to the 500 companies which were reporting. And they said, look, if you look at completeness, it is all there. But if you look at kind of accuracy and if you look at clarity, it's not there. And that's a fairly strong comment on by IICA on the data which is coming out. So then, when you, in that context, when you kind of look at what MCAs try to do, when they've kind of said, okay, let's put numerical scores, it's kind of understandable. You're saying that, look, the philosophy and why it's there will be covered in the question itself, and hopefully the answer will give you a sense of clarity with regard to what is happening. So that's their way of addressing it. But I kind of, Rajiv kind of put his pretty much was spot on when he said that some 150, 160 questions. I kind of keep saying that there are about 38 or 32 pages of answers which need to be provided. So I'm not sure how many people in the board, unfortunately, are going to be reading it. But what it means is that you're kind of trying to boil the ocean, look at too much data. I think we would have been better off by looking at materiality, begun with, a handful of data points, maybe 35, 40, 50, and then grown the number to 250 it need be. But that's a lot which we are asking companies to do. It's a lot which we are asking the shareholders to absorb and to read and draw conclusions from. So I must say that while I'm a strong believer in sustainability, and I do believe it's going to be a part of strategy and companies are going to be doing it. The way we've kind of rolled it out could have been a little bit more, could have been a little bit different and made it a little bit easier for companies to kind of absorb it before they kind of start reporting it. Once you've kind of got this number of these many points, it kind of goes down to the lowest, the junior most person in the room, you complete it and give it to me. So they don't have enough of an understanding of what needs to be included, why is it being included. So we should have begun small, focused on materiality, and then rolled it out, adding 3, 5, 7 different features.
Yeah, that's a fair point. Yeah. So I think we spoke about quite a few things here. It's been such an interesting. Yeah, it's been a pretty interesting conversation. We spoke about greenwashing, the entire move to more inclusive capitalism. Arun Mishra was here and he spoke about the sustainability framework in his organization. I do see some hands being raised up. But before I get on to you, Alka, I will just sort of bring in Kulmeet here, just because we spend a little bit of time on ESG reporting framework, and I want to sort of get his view. That one thing is becoming extremely clear from this panel is that ESG reporting is here to stay, and it is evident that technology has an extremely pivotal role to play. I want to understand from you, Kulmeet, that from an SAP perspective, how are you really helping or supporting organization, not only from business transformation perspective, but also ESG reporting? And I'll get on to you, Alka, and of course, bring in Sumant here to get his viewpoint on how has his journey been for Renew. Yeah.
Yeah, Shrija, thanks for that. And I just wanted to say, and Arun started with it, like any other responsible organization, I guess SAP is also very, very committed to the SDGs. And, we are slated to become carbon neutral by 2023, which is 2 years ahead of what we had originally claimed or announced to the world. So by 2023, we would be carbon neutral. But coming to your point, from an enabler perspective, and I'll just step back for a second, Shrija, what SAP has done, what we've done as an organization for the last 5 decades, almost 5 decades since we finish 50 years next year, I guess we've been helping businesses all across become more efficient by, optimizing their back office and front office. ERP has been the cornerstone of businesses, and we believe that by virtue of, the mission critical systems that we are working with in organizations, SAP does have an inherent advantage, and along with that, a responsibility, right, to help the world, to help enable sustainable practices. Now, we've always been helping customers with top lines and bottom lines and optimizations and running supply chains, but I guess today we are in a good position to help them manage their green lines, or what we call green lines. Now, we've got a massive a host of solutions, or a large suite of solutions, which is designed to address some of the, a lot of the pertinent challenges that we've been discussing today since we started, whether it is, just the identification of the processes which result in higher environmental impact, or identifying vendors or suppliers that are aligned to sustainability goals that Rajiv was talking about, optimizing transportation management solutions that can reduce carbon footprints, matching demand and supply to reduce wastage, automated ESG reporting, what we've been talking about so far. So we've got a host of solutions across a very vast or a wide gamut. And just one more point, and I know we'll be ending quickly, but we are also we've got our eye focused on what the future is bringing to us, Shrija. So almost 2% of our global resources at SAP are dedicated towards building solutions which are more futuristic in nature, which are based on not just regulatory, but to the comments that Rajiv made on shifting consumer preferences and behavior when you were speaking about the unicorns and the younger generation. So I think a lot of our solutions for the future are getting focused on those aspects. And it's this new breed of consumers that is today wanting to know, is the food organic or not? Is it chemical free? Where was the product made? Are the manufacturers, practicing circular economy themselves? What is the impact, or what is the environmental footprint of the car that they are driving, et cetera, et cetera. So we are keeping an eye on that. And today, just to end here, I think we are trying to embed a lot of these sustainability metrics into the fabric or natively into our applications, Shrija. So a lot happening on that front, and we are trying to compete with ourselves to see how we can move faster than ever with the changing times.
Thanks for that, Kulmeet. Alka, you have a quick point to make, and then I want to go on to Sumant. Yeah.
I just wanted to put on the table that I was part of the team that worked on the BRSR with the Ministry of Corporate Affairs, and we went through all the requirements. And for us at Tata Chemicals, we had been looking at all the various KPIs that were mentioned out there. It's been in the public domain. Most of these KPIs have been in the public domain for years. We've had the Global Reporting Initiative. We have, we had opted for UN Global Compact or Global Reporting Initiative, and most of these matrices, fall out there. As a sustainability practitioner and a person who is, completely aligned to the ESG concept, the triple bottom line, sustainable development, and so on and so forth, it's very important to look at the whole concept of reporting or these KPIs from the stakeholder perspective, and not necessarily from the perspective of what the company wants to talk about. And it's very, very important for us to look at what the stakeholder and which stakeholder is looking at what information. For instance, suppose I want to look at an organization and I want to know, is it a good organization for women to work in? And I'm looking at diversity and inclusion indicators are there, and I'm looking at, for example, retention numbers. Where there is only one place where I will get information, which is out in the public domain. Either the person is reporting in GRI or now in BRSR. And if I'm able to see that young women are very constantly, there is a quick turnover of women in this organization, I would step back and think about the organization, saying that as a stakeholder, how do I then evaluate the organization? So it's not just the investors who are looking at ESG framework, but it comes from the perspective of many, many stakeholders looking at what the organization is about, what is this value proposition that the organization puts out. Are they responsible? Are they giving appropriate? Are they looking after the customer data, privacy settings? These are important issues of human rights, of all of us wanting to know that. And it does look huge. It does look immense. But if you actually go down and say, if I am going to be a responsible business, how do I embed it across in everything that we do? And each of these KPIs or elements that there is an owner in the organization which is looking at it. It's looking at talent development. It's looking at.
Thanks for that, Alka. Yeah,
So,
thanks for that, Alka. That's well point taken. We understood the methodology and the rationale behind having a comprehensive document. And I think to Amit's point was also fair in terms of not wanting to have the junior most person in the organization being answering it, but make it a little more cumbersome. So I would like to sort of get to Sumant now and spend like about the last 10, 15 minutes with him and trying to understand about his transformation journey in the organization. Hello, Sumant. Thanks for joining in. Thanks for time and energy. We thank you for joining us. And I have with me Sumant Sinha, the founder and CEO of Renew. Sumant, before you joined in, we actually had Arun Mishra of Hindustan Zinc also come in, and there's some interesting revelations that came to before on his transformation journey on the organization. And he said that while purpose is important, I do have an eye on the dollar valuation, which also comes with me being seen as a very ESG compliant organization. And he also said that they have about $1 billion earmarked for the EV journey. I want to understand from you that this entire conversation about inclusive capitalism becoming increasingly louder and louder, and now with the SEBI regulatory stick also coming in, what do you think, how are organizations reacting to this? How has this been in your organization? And what the trends are you observing at large?
Yeah, thank you, Shrija. Thank you so much for having me on this panel discussion. There are several questions within your short question. One is about our journey. The second is, what do I see happening from a corporate standpoint? And third, really in some ways, what's happening globally on this issue. So very quickly, as far as we are concerned, obviously, as you know, we are a clean energy company. And so therefore, sustainability is at the heart of what we do. Obviously, at this point now, we generate almost 1% of India's total electricity production from clean sources, and we are already helping mitigate almost close to 0.5% of India's total carbon emissions, by converting the energy to clean electricity. So I think we're doing quite a bit. But while we were doing that, and we thought that was sufficient, we also realized that the way we go about doing this also has to be really clean and compliant and ESG friendly. And so over the last several years, we've been working on a number of different areas. As far as the S part is concerned of ESG, we've been looking at a lot of CSR programs that we've been doing at our sites. We operate more than 110 sites in different parts of very rural parts of India, where we obviously will be there for the next 25 years. So we are making sure that we are good neighbors. We're doing a lot of rural development programs, women's self-help groups, entrepreneurship, providing microgrids at the school level and so on. So that's one thing we're doing. The second thing is we've committed to going net zero and also to science-based targets. We committed to that in March of this year. Essentially, we're looking now very closely at our scope 1, 2, and 3 emissions. And we want to make sure that we are not just providing clean energy, but we're also the leaders in setting the path of how to become really a very strongly ESG compliant company. We're also looking at getting ESG ratings because I think it's important for us to benchmark where we are on our journey so that allows us to then improve year on year. Even though the office that we are renting, we made sure that we put in place all processes and systems to become a LEED Platinum office. So we've made sure of that. And from a governance standpoint, we have a fully independent board. It's a majority independent board, and we have a diversity in the board as well. And so our sense is that from a broad ESG standpoint, we are really it's not just good enough for us to provide clean energy, but also to be a trendsetter as far as overall sustainability and being on that journey is concerned. So that is something that we've been doing as a company for quite some time. Now, the second question you asked is about what I see happening globally, especially as far as corporates are concerned. I do see that certain corporates are moving in the direction of becoming more ESG focused. Certainly, the conversation and dialoguing around that has started and is happening at a higher level now. But I find that when it comes to a commercial implication, people are still a little bit careful. And therefore, for example, converting their electricity procurement to clean sources, that's electricity accounts for a third of carbon emissions. And therefore, converting electricity to clean electricity is very critical. And every corporate should really move in that direction. But really, in India so far, while people would like to procure green energy, they would not like to do it if it costs them more money. Okay. And so therefore, this compliance will really start when it's clearly proven that clean energy is not just better for the environment, but it's also cheaper as well. That's when you will see that compliance beginning to pick up. And so I would say that at some level, there is a lot of awareness and growing awareness. There is a desire to do it, but not at the cost of the commercial implications. Now, the one thing that I think will force companies to change, apart from all the SEBI requirements and so on, is really investor pressure. And it's pressure of people like Amit writing about what corporates are doing. And for investors to then start putting pressure on corporates, saying that, you know what, we will take our money elsewhere if you guys don't become properly and fully ESG compliant. And that pressure needs to be felt by corporates for them to truly start really doing a lot more as far as going on the sustainability journey is concerned. So I would say that's something that we are definitely seeing.
So that really is my worry. Couldn't there be temptations to greenwash yourself just because of the investor pressure, or do you have that stick hanging on your head?
Look, I think that's human nature. To some extent, people will always exaggerate a little bit of what they're doing. I don't think they'll do it in a malicious way or in a way that is meant to mislead, but certainly they will exaggerate a little bit what they are doing, right? And it's not that hard to do that. And that is really, I think, where the role of the rating agencies, the ESG rating agencies becomes very important, because it is their job to then go in and start rating corporates on what they're doing and how they're doing it. And they can actually spend more effort and time going into the details and making sure that they go behind the issue of whether in fact there is greenwashing taking place or not. So I think that is going to be quite an important role. So independent verification agencies will have a very important role to play in this to prevent greenwashing. Otherwise, anybody can say that they're doing anything, right? Anybody can say I'm doing this great CSR program or the other, or I'm doing whatever else I'm doing in my head office or impacting the lives of so many people. Everybody can say that. So I think that is really where independent verification becomes very, very important.
Amit, I would like to sort of bring you in. You just heard what Suman just said till now. What are the key questions or concerns that you have from promoters when they talk about the entire ESG narrative? Where do you really see the conflicts arising?
Look, Suman has his finger on the pulse, so he knows what is going on. I would kind of turn around and say it's not a question of what we worry about or etc. etc. I think what is important is who owns the governance space. Is it owned at the board level? Is it owned at some other level, at a relatively mid-management level? That is what is critical, because, once it is owned by the senior management at the board level and the senior management, it's very easy to kind of push it down and get a buy and, over a period of time, build a buy-in that, look, this is what we are going to be focusing on. The second thing is that, look, all the parameters on sustainability, social parameters, governance, of course, kind of is baked into the regulations, but is kind of there as a part of the KPI of the senior management. So we see that happening with a lot of the companies in particularly Europe, a little less so in America, though that is also changing. And increasingly, I expect to see that happen in Indian companies, though it is not as prevalent as you would expect it to be. So that is what it is more from my perspective, which is much, much more critical.
Okay. My last question to this panel, and I think it's an interesting one. I think we have Alka raising. Alka, you want to make a point before I sort of bring in the last question? Yes.
Yeah, I just wanted to agree with Amit and say, yes, the governance is the most critical aspect that he talked about. And sustainability has to rest with the leadership at the board level. And truly, if it is not there, then, whatever somebody may do in the organization, we will never be able to take forward. So which committee of the board and who's looking at various elements of sustainability and KPIs is the most critical aspect. So I just thought I will add that as well.
Okay, I would like to sort of bring you.
Just,
Yeah.
sorry, I know. I'll just kind of add to what Alka is saying. So, just like we've kind of looked at boards and we've said, look, there has to be, someone who understands audit and someone who understands technology and cyber risk. I think it's time for boards to kind of recognize that there needs to be someone who understands a lot more on sustainability, who's a part of the board or in a very, very senior position in the company, who can drive the agenda towards this.
Okay.
Back to you.
Some sort of important asks coming to the fore. My last question, the last 1.5 hours that I've been having with all of you, Rajiv, Arun, Kulmeet, Alka, Sumant, Amit, very interesting ideas and thoughts came to the fore. Everything seems to be tied around this future conversation, industries of the future, and how ESG is so important for building industry of the future. And one needs to understand that the business leaders of the future perhaps have newer challenges which the leaders of the yesteryears have not had. And the most important being the climatic changes. So if I were to ask these three important people in this August panel, the three critical traits for the leadership of the future, what would that be? I'll begin with you, Simant, then get on to you, Amit, and then to Alka.
Three leadership traits of the future. Wow, that's an interesting question.
Maybe we can put in three between the three of us.
So look, I think one thing that I can only say is that in industries like ours, there is so much change happening so rapidly on the technology front, on the regulatory front, on the business model front, on the consumer front, that you have to have a very high degree of agility in being able to think about what are the changes that are happening, understand them, and then figure out what the implications might be for somebody in the future, and start looking at your business a few years out, because if you don't start taking steps today to address future opportunities, you will be left out on the cold. So anticipating the future, being able to change your business model in accordance with that, hire the right people ahead of time, and then being able to address the opportunities as they arise, I think that's going to be very, very important. So I think that's one thing I would say, which is agility and the ability to see the future. The second thing I would say is that businesses are also going to be buffeted by a lot of these kinds of issues that we're discussing right now, which is around sustainability, which is going to be around climate change, and therefore future-proofing your business from that standpoint to make sure that your business is prepared to take on the challenges that will arise on account of climate change type of issues, I think is also going to be very important. And the third thing I would say in terms of what is required is I think that consumer preferences are changing very rapidly as well. And as we sort of saw earlier, younger people are becoming consumers. Their whole way of thinking is quite different from the way of thinking of some of us on this panel, for example. And we need to be able to recognize what that thinking is and how that is going to change and shape businesses in the future. So I think, again, understanding that, being able to appreciate that, and being able to plan for it, I think is also very important. All the other aspects of leadership in general, aspiration, vision, communication, all of those are, of course, going to continue to be important as well.
Okay, Amit, what about you?
Well, look, Sumant pretty much gave a fairly comprehensive list in terms of what the characteristics are. I've just kind of given, the questions which you've asked me focused on greenwashing. I'd kind of add integrity to the list, though one kind of assumes that it's a hygiene factor and does not have to be listed separately. So all what Suman has said and integrity to that list. Yeah.
Okay, Alka?
Yeah, thanks, Shrija. So, I just like to add to it. And I think the three things that I would like to sort of focus on. One is, of course, the defining purpose. Why are we here? For what reason? And that superordinate sort of goal of doing good for society and environment. I think that's a very important part. Another aspect that I think leaders should look at is, how do you actually do social business? So how do you look at considerations which are other than just what the company is making money about? So does the kind of value chain or what I put out has a benefit across it to so many more people? So the whole concept of social businesses, I think will be some sort of a center stage, going forward. And the third thing I would, focus on is kind of a balance. The balance between, so even if I look at social or I look at environment or look at governance or the earning, there is a requirement for balance. It may be good socially because I'm giving employment to so many people, but may have issues with the environment. And this deep understanding of how do you get a balance between the three elements and getting profit. I think these are the three traits that I would look at, adding to all the other traits that Sumant and Amit talked about.
Okay, thank you, everybody. Thank you for your time and energy for Women's Sustainability Dialogues. Until the time I see you next, goodbye and good luck. Thank you. Thank you very much for joining.
Thank you, Shrija. Thank you so much.
Thank you.